And right now, folks, we're going to talk to our man Basil Chapman, as we do every Tuesday at 3:15 p.m. Eastern Time. And folks, if you head on over to the front page of TFNN, you will see Basil's opening call right on the front page. You can click that button. You can sign up, folks, whether it's for a month over here for $149, 6 months for $695. You save almost $200 or 22%, or a year at $1195. You save $593 or 33.17%. And you get a 30-day money-back guarantee with all of it, folks. You gain access to a number of outstanding webinars. We always talk about this, but check it out right now while we're talking to our man, Basil Chapman. Basil, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic. How is beautiful Boston on this lovely Tuesday? I hear you're getting a little heat, maybe.
Hot.
Yeah.
A little hot. Playing tennis yesterday was a little bit strenuous, but it was fun anyway. It's good, preferably summer than winter, as far as I'm concerned.
For sure. So what do you think about this market, Basil?
So there are a couple of things going on. First of all, for anyone new to my work, I always try to identify the lowest low bar and each successively higher peak. Alphabetize them, A, B, C, D, E, F, G, or uppercase on the way up, lowercase on the way down. And if I get a buy signal that's upgraded to a buy mode, say in leg B, anticipated that at least there'll be 4 higher peaks going to a D, and then we have to assess what's next. So it's a real simple technique, but it can get a little complex when you get to a stage right now. So here we are. We've got the peak D in the Dow at 45,016, just a tad off its 45,073 all-time high. We've got a leg E in the weekly chart. It's very different to many of even the IWM. The Russell is only in a leg D in its weekly chart, and this one's also starting to stall at the top. So we just today, I had certain parameters. I didn't want to try to pick the bottom of any short inverse ETF. I wanted to try to get it where there's a move to the downside, making new lows, and then maybe a slight move to the upside at a certain level to at least start a short. Rather than try to pick the exact bottom, I wanted to get it just off the bottom. So today we actually started a short in one of the S&Ps. One of the indices is actually the S&P. It went to a leg D. There's no indication right now. The high is 6409.26. And the technicals are mostly very positive, so it really has to be bad news that's going to be influential. But if you look at the QQQ, look at this. This is a leg E. If you look at the SMH, and the only thing I've got here is the Chapman wave methodology. This is also a big spike to the upside to an all-time high, the little doji candle. So I'm watching this very closely. So tomorrow, one of the things I always talk about is markets don't go down. They have these like one-offs, a sudden sharp move down, then closes off the low or even at the high of the day. But to have a sustained move, it's imperative that there's a news event that starts to permeate the market, and then the news starts to accelerate. And if you only get that when it's something that the market has listened to and decided that is negative. So at this particular point, we don't have any negative news. So if it's Powell tomorrow, who's in a kind of a difficulties in a quandary, because he has economic specs historically that he has to look at without projecting forward. He has to look kind of backwards before he can look forward. If he sticks to his rigor, we don't know, but there's a chance that he might not say anything that really impacts the market positively. So that might be the only thing that I can see on right now that says there's a news event, and you just mentioned, and we saw this today, the TLT turned around from being quite kind of so-so in the morning to sharply higher, up $1.32. Therefore, the TBT, the inverse, is down sharply. So that's yields. That's important. But if you look at the bigger picture, you'll see that we're just in a trading range for yields. So I'm saying it has to be something that the market perceives as bad news. So within that context, what I've been doing for subscribers is we haven't been going for any of the biggies right now, meaning the indexes to add to anything like that. We're waiting for some kind of a pullback to add to our positions because we're still long the Dow. Here it is close to all-time highs. We're long GE, but GE is also stalled. Look, it's right here. It makes an all-time high today, but it's right at an area that could be a little double top resistance. The other one that I use as an indicator, because it's right in the broker-dealer area, is Robinhood. So GE, we're long. Robinhood, we're still long. But 113.44 just a week and a half ago, peak F. And now it's kind of stalled. This is Robinhood. If you're looking at Microsoft, all-time high 3 days ago, didn't quite make it today. Nothing wrong other than the chart wave notation. But if you start to look a little deeper at Microsoft, the MACD, the moving average, has been going down. The relative strength is a little weak. Stochastic is actually under 80%. So I'm looking at this and saying there's an opportunity for the market to pull back. However, what we've started to do, yesterday we got 2 new positions, and we've been avoiding some of the areas that we're already in, and over the last couple of weeks we've got low price positions that have actually done very well, because I wanted to conserve some money so that we can either be looking at the short side or new positions. But I decided that looking at some sectors are actually holding pretty well. And I picked 2 stocks within each sector that is not one of the high techs. And so far, these 2 stocks are up from where we bought them yesterday, but one has earnings out tomorrow, and the next one has earnings out on Thursday. So we'll see if they can hold. But these are going to be also dividend stocks, and that's important. We don't usually do that sort of thing. So I'm looking for the chance, because I don't believe that it's worth getting a dividend stock if the capital is going to depreciate because it goes down. I only want to buy it if there's a chance that both the equity you're looking at goes up and you're going to get the benefit of a dividend. So I've got fairly tight stops on these. If they hold, I think that's going to be just an inkling to me. Give me an idea that we're starting to see what I've been talking about, a slight broadening out of the market. And you can even look at something like a Shopify. I mean, look at that. It just got clobbered. It went from 176 in November down to 23 in November 21. And in 22, it goes down to 23.63, and it's come back very nicely. But now it's starting to stall. So I'm saying there's been a rotation through different sectors. And some of the stocks that we're just looking at most recently are stocks that have had the same very poor price movement up until last week or so, and they just started to find some strength. So I'm being very selective, and as I say, we've just started a short position with a very tight stop, but I think that I want to be ready just in case the market doesn't like anything that happens tomorrow. But as I say, to get a move that goes 4%, 5%, 6 or 7 or 8% down, you really have to have this bad. Look at every single decline. Remember the April one from a year ago with the semis and everything making those high techs. I pointed out those round number highs, and then we got a sharp pullback because there was that fear of higher tariffs, etc. Higher rates. So we're going to be watching this very closely. So I'm ready for anything. We kept our long positions, but we're going to start adding a short, add to the shorts if necessary, and keep these new longs.
Great information as always, Basil, and we got some big earnings. Maybe those earnings creep in like you're talking about, but I hear you on the news. Folks, check out the opening call. Basil, thanks so much. We look forward to the program tomorrow.
Thank you, Tommy. You too.
We'll be right back, folks.